All right, we are on. All right. So here is the thing. I have marked my 3 zones on the 1 hour time frame because market is running in this range right now. It is not beyond that or below that, right? I don't have to draw anything
Right.
else other than that. What I will do is I will go to the 15 minutes. Once I have identified my key levels or key zones, then I'll go to the 15 minutes chart. That's debug again. All right. See, we have got the drawings. Now we are in the 15 minutes, correct? Okay. So what I'll do is, let me just first make it visible. Okay. Now we can see that clearly. Okay. So the market is running here currently, and it has already rejected this zone. So it has passed this zone. What I will do is I need to first draw my trend line. Okay. So it is right
Okay.
sitting on the trend line right now. What I need to see is, since the market is in uptrend, what I need is a heavy rejection. And if this low is not getting broken, there is a chance for the pullback because the market is still in the uptrend, correct?
Right.
So this is the 15 minutes zone. This is your 15 minutes zone. You have the low here. You have the low here, previous lows. And the market has passed this low, meaning this is probably trying to make a new low, correct? So that is your upper channel. The markets was running in this channel particularly. Now it is breaking out. It is breaking out. So in 15 minutes time frame, if we see the rejection from this area, and if it goes back into the channel, there is a chance for the buy. There is a chance for the buy because market is respecting this level. It is not breaking the low, previous low, structure low, right? So what you would do is, once you get
Right.
the back in the channel, you can buy because market is still in the uptrend. If you go back to the 1 hour again, now that you have drawn the channel, you will see that the low is here. Previous structure low is here. Correct?
Correct.
So market has to react at this level. If it does, and if it is going back into the channel, then only we can buy. Because the market, what will market do? It will definitely
We
react
take
here.
the trade on the channel.
It will come back and test the channel. It will come here, go back, test it, and can bounce back again for the next level. Correct? So what we need?
Correct.
We need the safety. We need safety. And where that safety is, the safety would be where the price goes back into the channel. Then we can confirm that the price has rejected and this is a fake breakout. Then we can buy. Right?
Right.
So that is how you can do that. See, for scalping, you don't need to go more than 1 hour because you are trading on the 15 minutes or even in the 5 minutes. Correct? So you just need analysis maximum on the 1 hour chart. You don't need to go more than that. This is your 5 minutes chart. And if you see the market structure, now on the 5 minutes, it has spiked and already tested this trend line. And it is now going back again down. So what we need to do? We need to just watch. If the market comes into the favor, then we can buy in inside the channel. Getting my point?
Get it.
All right.
Thank you, sir.
Yeah. So continuing with the trend line and trend channel. Is there any question? All right.
No, no. All right.
Okay, fine.
Thank you.
We'll go back to the 1 hour.
So I started from 1 hour to down.
We will go to the 1 hour. We will start with the 1 hour because the
No, no
market
need.
is already not going below that, because we are talking about the bigger scale analysis here, right?
Right.
Okay, so this is your first trend line. This is your
Excuse
channel.
me, sir. Excuse me, sir.
Yes, yes, yes.
I have one question, if you don't mind. I'm interrupting
yes.
you.
Yes, please.
Before we start, can
Yeah.
we know the range? What is the range in between market can be the reach? Is there any something like that? Like Forex? Forex is having range. So this boom and crash is having range, something like that. It can
Yes.
go in between some range only.
You see here, this is the area of the range. Are you talking about this ranging market or something else?
No, not ranging market. The high of the day or low of the day, what Forex is
Yes.
having,
Maybe
something
Yes.
like that.
talking about circuit kind of a thing. Is that what you want to understand?
No, actually it is not like that. The market is not running like that. Let me just open the crash market and show you something so that you can understand. This is very predictable market. Actually, if you have a limited view, you don't need to go more than that. Okay, this is 24 hours and this is where it started. This is the data we have. It started with what? 2019 May, April 2019. It started to go up. This is the high, and this is where, this is October. Okay, 10th of 2020. 10th of 2020, the crash market, crash 1000 is started to fall, and it is constantly falling. Since then, it is constantly falling. It had a pullback, two pullback bigger. Other than that, you don't have any bigger pullbacks. You can see that. See, this
Yeah.
is the market range. This is the market range of 24 hours.
Yeah.
If you go to the 4 hour, what you can see that the market is still making the new lows. It is still making the new structural lows.
Yeah.
So you are absolutely fearless to trade on this market for the sale, unless and until we are creating any further new highs more than this structure. This structure is broken down, and we are expecting more fall on this in coming days.
Yeah.
Correct? Because the
Yes.
market is creating the
Flat
lows,
pattern. Yeah.
lower highs. This is the lower highs. So there is no limitation of where the market would go or where it would end. There is no limitation in this crash, boom and crash.
I got you.
Now let me show you the boom 500. Actually, what you are seeing on the boom 500 is it has never went into the uptrend since it started. You would not believe that, but let me show you that. Look at that. This is 24 hours. It actually never went into the uptrend. This was the high. This is refreshing. Okay. Okay. All right. So this is the range. Correct? This is the high. What is it doing?
So browser memory.
No, I don't have any issues with the browser. Actually, this web tool is crashing last 7 to 8 days.
Okay.
It is not refreshing properly or saving properly. Just okay. So as you can see, now you can see, right, the
Yep.
chart. So
Yes,
this
sir.
is the high. This is the high which is not broken since it started. It made a pullback, which was a pullback. There was no new highs,
Yep.
correct? And then
Yes.
it is still going into this trend line. It has never broken. It has been never broken, right?
Mm. Yep.
So this boom 500, I would barely trade on this boom 500 because there is no projection at all. It
Yep.
is continuously in the downtrend, and it is the
Yes.
slowest pair among all four. I'll tell you, this will not give you major profits because this is the most slowest pair among all the four pairs. And
Mhm.
see, crash 500 is the fastest one. It can give you the fast profit. It can take the fastest loss as well, right?
Yep.
So let's continue with the boom 1000. All right. See, my charts has gone. It's gone. All the drawings are gone. All right. No worries. So basically, the idea of the trend line is once you mark the zones are this. I am trusting more zones than the lines because this is the area and it reacts inside that always.
Nikhil, can I ask a question here?
Yeah, sure.
Yeah. So if you look at this market currently,
Yeah,
this so there was a slight spike at the uh, level. So at the trend line.
trend line.
Yeah,
Correct.
this one.
Correct. Correct.
So while I was doing it, I was inclined to kind of make a purchase here
All right.
because we saw that there's an uptick from here. Is that the right
Okay.
approach to
Uh,
trade the trend lines, or do we wait till the next zone?
See, you need a confirmation first. A small spike or a smaller reaction on the trend line would not get you the confirmation.
Yeah.
I would not buy that. The reason behind that is, see, what you see here, that's the resistance, correct? The previous highs, which can be
Hmm.
your resistance as well at the trend line. So the market reacted exactly same. So that could be the risky zone unless and until you get the bigger spike, like it shoots halfway almost, correct?
Okay.
So that shows the momentum because as you can see, the 3 1 hour candle after the spin bar shooting star, there are two bearish candle which are getting stronger. That is your sign for the reversal, probable reversal. But reversal would confirm only when this level is getting broken here at this level. It has to break the previous structure low, correct? If it is breaking the previous structure low, then you can presume that now, okay, the high is not been made and it has been broken. It is breaking the previous structure low, meaning the sellers are getting more stronger. So at the trend line, I would not buy immediately if I see any kind of smaller spikes, any kind of smaller spikes. Unless and until you get the stronger reaction at the trend line, we cannot buy it, right?
Okay.
Let's check it out after 15 minutes if it is a stronger spike or not. You see, it has not broken the previous candle even.
Yeah.
There was a spike previously. This is the spinning top candle, right? When we talk about the candlestick, that's a spinning top or a doji, correct? So there was an indecision and the spike happened, but spike ended with what? Just a small hammer, not even closing above this range. So that is not the stronger one. It has to break this high, previous high of the candle. Then we can think about, right now what we can do is probably we can take a risk because it's in the uptrend. So this is my stop loss and I would go like this. Correct? If the spike is higher.
Okay.
Right? Okay. So some of you have sent me the analysis of the trend line. Now, see, there is a reason for the trend line to make at the wicks first. Okay, because wicks are most important part in the movement crash. It is the area where the market gets the reaction maximum, not the body. Because if you observe these spikes, this market or this market, this spikes, the market went up here. The market went up above this candle body, and then it spiked and started with this candle at the same level. You can see that, right? So if you buy here or sell here, you would probably go in a drawdown. Or if you wait till this spike, and if you see that now, okay, this spike is getting this high of the wick is getting rejection from the same candle. Now it is confirmed. You get the better area to enter. You have to wait for it to react at the spike, at the wick high, right? So always when I am drawing the trend line, I would want to draw at the wicks first, connecting the maximum wicks like that. That is your best trend line setup. Now, other than that, what you can do is if you find the market is respecting inside that, you can place another trend line like that. If you find two spots, here are your two spots. Okay, so 1, 2, and 3, which I'm connecting. So next time when the market is breaking this, going up, coming back inside, now that you have a reason, if here the market reach here and you get the spike or a rejection, you have an idea that in the boom, the market is not making any new high and it is taking a rejection. So this would probably fall down more. And which is what happened here. If you see here, it touches and spikes back, and the candle starts from there onwards and it goes down. Now let me draw a layer here and show you the layer. Okay, this is a previous low where the body starts and the wick starts. I'm putting a line, another line here. Okay, now you see the market comes straight to the previous low, test it and reject it. It test it and reject it. So this wicks and this body are the zone. You have to consider it as a zone, and always the trend line starts and reaction starts at the wicks. So you have to connect maximum wicks possible. Doesn't matter if you have the body or it is crossing your trend line. Sometimes what happens is the market goes below, it makes the fake breakout and come back into the channel. So you will have to wait for that. All right. So the concept of the trend line and trend channel is falling like that. Now there is another concept in the crash and boom. Whenever you see the trend line is getting broken, immediately you need to understand if this is a trend, this is a trend line. And if it is getting broken here, you have to understand that the market is changing its course. Whatever market, if you don't have anything on the chart, if you don't have anything on the chart, you put the trend line and see whenever it is broken, that is a sign that the market is changing its course. But this trend line will play its role in future market as well. If it is a maximum touch, if this trend line has a maximum touch, it will have, understand this and remember this, it will have a role to play in the future market. If you extend this, the market will come here in future and give you the rejection. This would be a stronger resistance and support zone, not the horizontal lines, but the trend lines. Let me show you if I can find you the similar one. So I'm connecting this line here, and supposingly we don't have market further up ahead, and this line, this trend line is playing its role already. Okay, so we have a channel. It made a breakout, it went back in, it fake breakout, went back in. Now let's see if it is respecting further ahead. You see, it has respected here, and it is after few weeks, it is respecting here as well. If I remove this, you get this rejection here as well. If I extend this channel, you will find it, whether it's a support, it could be a support or it could be a resistance as well. No matter where the market goes, but this trend lines, if it has a maximum touch, it has a role to play in the future as well. So if you find any trend line which is extending like that, even in the smaller market, here you get the resistance, here you get the resistance and confirmation of the bounce back. It will play, it will 100% play its role. Look at that, it works here as well. You see that? So this trend lines works the most on the boom and crash. I personally does not rely on this supply and demand zone more. I rely mostly on the trend lines, because these are very finest key levels I draw on the chart just to make myself clear that the market is running in this range, and I don't have to go further analyze it back or forth. So this is my range to play for the upcoming day. I don't even need this area, right? So once this is this trend line is or the channel is broken, what we need is the confirmation. Now that we know on the 1 hour that it is trying to come to this level, so we need to fine tune and we need to watch this area. If we get the rejection and this trend line, this area gets tested, then we can buy or sell accordingly. Otherwise, there is a longer wait to play, because the trend line is already broken, and if it is getting tested, that's a downtrend started. Correct? Because this was the uptrend for last 2 days. Okay, so there is another concept which I am showing you right now. All right. Let's go to the 4 hour now. So on the 4 hours, now that we know that the market is rejecting, correct? What do we need to do? We need to confirm that whether this is a pullback or the continuation is going to happen again. What do you need? The confirmation. The confirmation comes here on the 4 hours. So what was your channel on the 4 hour? Your channel was supposed to be like that on the 4 hour, correct? So we have, now that we understood that it is pulling back, what are the areas we can watch? This is the area on the 4 hour we can watch, and then accordingly we take a call, because now this is the confluence level of the 4 hour trend line. We have already analyzed that 1 hour trend line was running like that, correct? It has broken. It has already broken. But our 4 hour analysis says that the market is not in mood to go more down yet, because there is no confirmation of the newer lows. Where is the newer low? There is no low has been made. The high is been already registered more than this. Now, if you see the 4 hour, why I'm coming back to 4 hour is, this was the previous structure high, and the market has already given us a sign that I have created a high here. So there is a chance after a couple of hours, the market may come back, right? So now what I need to do? I need to draw another trend line. Since the 1 hour trend line is broken, I need to make the another trend line on the 4 hour to see where it gets the confluence level with the zone. So this is my zone, and this is where I need to wait. I need to wait the market to give me the reaction here now, right? This was the previous trend line. Now, if you put like that every time, if you put like that, you will see that as soon as you get the trend line is broken, you will have a new trend start. This was your trend. It has ended here. It made the range, went back up. This trend line, it broke down. Now it's in a downtrend. So if this trend line is broken, getting broken, now the market has not even reached the channel. 4 hour channel is this, and the market has not really reached there. It had to reach there, but it has rejected beforehand. So now we need to wait for this area. Okay. Now, if you see, let me just clear this drawings. You will always find this market run in these channels. Look at this. This patterns. You draw the trend channel on the 4 hour, and if you see this confluence points, it is intersecting. If the market is intersecting like that, you should really understand that this is the area. If it is not giving you any kind of sign for the buy here, then it is a downtrend in the boom. Always it happens like that. If you see this fake breakout, now if you connect from this area to the second lot, and then there is one more thing, you connect this to this. That's your major point channel. So even if you see in that zone in the 4 hours, it will give you the clear idea of the market direction always. You even don't need your zones or the lines at max. Put 2 or 3 zones at the top or bottom. You will see your range where you want to play. And then there is a market structure. If you see, these are the levels. Your first wave, it broke out, made the high, broke out, didn't made any new lows, broke out upper side. You can definitely go for the buy. You can continue for that. Correct? Okay. So any questions for the trend lines or channel? Any confusion regarding that? Because I wanted to start the question and answer on this one before we proceed with the chart pattern. I had some of you sent me the personal messages regarding the analysis and all that. Hello.
Sir, can you
Anyone?
use Fibonacci SNR level here?
Okay, all right. See, Fibonacci definitely it will work, but it will work 60% or 50% times, because this market is the synthetic market and it is a algorithm based market. So even if you put the Fibonacci level, let me just draw you Fibonacci level. Fibonacci retracements. Okay, so here you have the Fibonacci level, right? Now look at the zones. On the boom and crash, you will trust only two levels, only two levels if you want to try Fibonacci, which is your 61.8 level and 78.6 level. Okay, that's your golden zone. That's your golden zone. Other than that, you will not find any major reversals. The market will definitely give you a bigger sign, bigger picture at this one of these levels only. One of these levels only. So if I draw the Fibonacci level here, let's say the market is running here and it has not crossed this area, right?
Yes.
Market has started. Market has started. Can you please mute? Yeah, thank you. So market has started from this level. Now, if we in the uptrend, if we want to analyze, what we need to do is we need to go reverse, right? So this top to bottom. Now, what is the reverse of the 78.6 level? Can anyone tell me? If we have these levels, what is the counterpart of 78.6 level?
So
1.786.
That is your 23 level, 0.23. 61.8 level is counterpart is 38.2. So in the uptrend or downtrend, if we want to analyze, let's say this is the downtrend and now we are going up and we see the rejection at one of this level, what can we understand? 78.6 level. If we see the bounce back from this level, there could be a possibility of reversal in the market. If it breaks this 50, that's your complete reversal. It will probably go back full down. If you see that, you can see that, right? If it breaks your 50 level, it can go complete down. But if you see a bounce back from the 50 level and crosses the 61.8, that's your continuation. It can probably hit your zero level or go above that. Let's figure it out in the another chart or another area so that you get a clear picture of that. This was the uptrend, correct? This was the complete uptrend. Let me just, okay. Now, if we have to analyze, market has started pulling back from this level. It has reacted here at 23.6, break it out, came back to 38.2, break it out, 0.50 level, which was a very good level considered in the market, forex market. This is a very good level for the forex market, but not for the boom and crash. It has easily broken out. Now it is in the golden zone of between 61.8 and 78.6. It has taken a reversal here. What do you see? It went back up totally, correct? This
Yep.
area, if you want to use the Fibonacci level, these are the area you should trust, not other than that. In my experience, I would not even trust this area or this area, only this area, because maximum time the market gives you the bigger rejection and bigger portion of the movement on this from this zone. Okay, clear it out.
Yes, sir.
Let's say the crash. The more you see, the point is, the more you involve the things like indicators or labels or Fibonacci labels or maybe another tools, right? The more you involve in the chart, you will get more confused with that. Okay, you see this trend line is respecting for what time, how many days? This is a 4-hour chart, and how many days it is respecting, correct? Even if you see, even if I put a smaller amount of Fibonacci here, okay, this area to this area, let's figure it out. The market is not even coming out of 236 level since last how many days? July, August, from this area, 9th of July. It has not even crossed this 23.6 levels, correct? So if you are planning for the sale in the crash 1000, it is absolutely marvelous. But if you sell here and the market goes till here, that's your case to worry about. This can blow you up. Where is your entry points? These are your entry points. If you go on the 4-hour chart or even the 1-hour chart, what does it show you? If you extend this trend line, let me show you this. Even this trend line would work. If you play the minor trend line, sometimes even in this trend line, there will be a micro trend line channel, trend line or the channel, there will be, correct? So this is the bigger trend line. Now you can draw something like that. That's your uptrend for a couple of hours, correct? The market has started pulling back from this area. That was your uptrend for a couple of hours. Even if you see, this was a range, and then market started to shoot up. But then when it broke here, this trend line, when it broke here, it tested this area and then taken a resistance from this trend line. So these are the trend line confluences you can play around. See, if you extend this, it will work. And even this, or probably you can extend this. What do you see? Let me remove this. This was a false breakout and the market came up. Now you have this 1, 2, 3, 4, 5, 6, 7, 8, 9. How many touches? And then once you figure it out, and if you see the market is not even crossing this range, what do? You will wait for this area to be played out. Now you have to watch in this area here, because what is this? That's your previous market structure. Correct? This is the support. This is the support. This is the support. Now it has become a resistance. If you extend a little bit, this is the zone. It has become a resistance. So this is your confluence area. And it is a trend line or a channel portion. And if I extend this, you can see it clearly. It is there. So this is the kind of bits and pieces in the trend line or trend channel you will have to consider. Even if you are in a smaller time frame, let's say on the 15 minutes, if you are a scalper and if you want to scalp quick spikes, let me show you this area so you get the better idea. Okay, so in the 15 minutes, you can probably add up something like that. Correct? Because this is your resistance, breakout, false breakout, support, resistance. That's a strong one. This is a strong one. And if you see that the market came up and if you see this rejection, you can probably sell here in the crash, because your overall bias is sale, right? For a long time. So you can take a pretty good judgment over here and sell it out on the 15 minute for the scalp. It is going down as usual. Getting it? You extend it and it becomes more stronger. You can see that. You just have to align it properly. Maximum touch and it will work. It will 100% work. You can see that it works in the past as well. And now you narrow down even in this trend line. If you just stretch it up, what do you see? You can see that, right? Look at that. This support was few days back. If I extend on the second one here, it becomes the third one, and becomes the fourth one, becomes the fifth one, becomes the sixth, seventh, eighth one. Getting my point?
This trend line is working fabulously here.
Absolutely. This is the reason why I'm extending this trend line and showing you lot more examples on the trend line, because I trust this the most. And believe me, if you take a blind trade at the confluence for the sale and buy, 50% or 60% time you will win. Even if you don't analyze anything else and blindly just assume that you wanted a spike over here, you enter for the 5 to 7 candles stop loss. If you sell here for 5 to 7 candles stop loss, you will get a spike. Definitely you will get the spike, right? Now let me show you another trick on the 5 minutes. Yes, okay. If if you are working on the 1 minute or 5 minute chart for the scalping, and you are drawing it, you see this first spike, right? As soon as you get to see the second spike, you draw a trend line. Immediately you draw a trend line. Okay. Now here, let's say here, you get a spike here. I drew a trend line like this and extend it. Let's say the market has not generated. It is coming down. Then it pulled back. Then it pulled back. What do you see? It worked. It worked. 5-minute time frame and 1 minute time frame, you will not use this trend line more than 3 times. It will break. 50% of time it may work, 50% of time it may not work. Look at that. If you draw it like that, as soon as on the 5 minute you get the second spike, you draw a trend line. Correct? You take a spike, exit here, you wait for the market to come here, take your chance. Why? Because there is a market structure. Correct? You take your chance for 2 candles, you will get the spike. Next time, if you take this, next time the market comes back, where it spiked, it tested the previous low, it came back to tested the previous low. This was the confluence. You entered here and you get the spike. Now, if you see this broken, if you get to see this broken, understand the market will soon make a up move. Definitely. It will not work more than 3 or 4 times. See the same thing on the 1 minute. I don't go more than 3 times. 5 minutes it can work 3 or 4 times, but 1 minute it cannot work more than 3 times. It will fake you out.
Till even at 5 minutes, we take the trade only after we get a confirmation spike, or we take it when the market is reached there.
Okay. On the 5-minute chart, you consider first that what is the trend, correct? Then you put the trend line and your zones or your levels, key levels. When the market reaches there at the confluence level, you take for the spike. Not before that, not just randomly.
Okay.
Correct? Let me show you that same thing on the 1 minute. You see, this spike had happened here. Now, market came here and give you the spike. It respected it for 2 minutes. It faked out and spiked it. 2 minutes, it faked out and spiked it. Not more than that. Okay. Now, let me find the another area for the 1 minute to make you a good example of that. Okay, this was example. Okay, all right. Here, this was the first spike. You draw it like that in extend. Correct? It worked for the third time, and then it broke out. Got it? If you see it happen second time, there is a chance you get it third time. But where? At the level. If you see it is becoming a confluence point, then you can take up a chance. What was this? It was a previous structure. So it has came back to test the previous low, and then it gave you the spike. If it wants to go down more, it will continue. But if it breaks out, you wait. Correct? It worked only 2 times. 1 and 2. It never reached the third time. It constantly spiked. And then here it was the third time. If you extend it, here was the third time. So let's go to the 5 minutes. Okay. Let's say the market respect that or not. Even if you want to analyze the market, how will you do that? Now we know the market structure, right? We know the market
Yes.
structure. So let's say if we don't want to analyze any other time frame, that's okay. That's completely fine. You don't have to confuse yourself. Just wait for the right time. If we see this was the previous low, this is the new high. This was the new previous high. This is the new high, lower high. Now, if you see this is this pattern, this market has not happened yet. Let's say this market is not happened yet. How would you figure it out that the market will go further more down? Only and only if you see this high is getting broken. Now that we know couple of spikes, rejection from the previous high, rejection, it breaks out, fake it up, go back again, retest, again makes the high. Correct? So there is no point for me right now to sell it out. Okay. Unless and until if we see what is the market structure. Now that this is the low. This is your low. If the market is coming to this point, I would understand that okay, now the market has a momentum of going down because it is not going beyond this point above. Let's see further ahead. Okay, we got it right here. Correct? So now what we wait for? If we put the trend line or the setup, let's set it up correctly. What do you see? That's your trend line, correct? If I connect 2 points and the market is not generated here, what I will wait? If this is broken, I will wait for it to retest. If it retests and spike up, I will enter here. Getting me?
Yes, sir.
What you need? You need a breakout of this trend line and this zone to retest. If it retest and break it out, then we enter. If it is not, we will wait. And when it does, we will enter. As soon as it does, we enter. Correct? Now we need to keep on extending this trend line just to be sure that where can we take the profit? Because we are scalping, right? Market comes down and goes up again, can go up again. You cannot lose those money, right? Once you are in trade. So what you need? You need an idea where can market stop. So either you need a trend line or the zone. Where is your next zone? Your next zone is probably somewhere around here in this area, right? Since the market has broken down already in the 5 minute, we can expect the market to make the reaction over here somewhere in this zone. Let's expand. And it does that. So here you can exit. After entering here, couple of spike, your scalping is done. Because it broke the trend line and now already it's at this confluence zone. It can pull back. You never know. Here you never know, it can go down as well. Right? So you can secure your profit here in this zone. And if the market wants to continue, what you can do? You need to have this trend line retested and break this level. Correct? Because that is the way how the market plays. And if this is getting broken, what we can do? We can enter here with the stop loss or just above here, this market structure, or here at the max. What we are going to lose? We are going to lose this much. But if the market plays out, where it will go? It will go here at this level. Because the structure is here. You can see that this is the high. This is the high and it has a low, which is support and resistance. That is a key level for the 5 minute. So if you are scalping, you don't need to go any other time frame. If you know this market structure and how it is playing, because for me, it is something like this is high, this is its low, this is high, it has broken here, right? So this area is gone now. This area is gone now. What I need to watch is only this high, only this high. Now the market makes it move, retest it, comes back, retest it, doesn't even reach here, goes back down again, breaks this level. So this area is secured now. The market structure is secured now. This area secured, this area is secured. Now we fall into this area, correct? If the market is breaking this area and doesn't make this touch this high or even break it and bounce it back, there is a scope of going back down again, correct? Because market structure is not getting broken. So let's clear and go further ahead. Okay. It's not getting broken. Okay. All right. So at this zone, at this junction, what the market did is a pullback or a reversal. If this level is broken, this was a secure zone, correct? This low, this low, this is the market structure. That's your safe area. Now here at this market structure, it spikes and doesn't even make the new high. So what you can do? You can, if after this spike, you can sell. You can definitely sell. Why? Because the market is not making any new. You can risk what? This much. And you can target what? Until this area. Because the structure is lying down here. This is your structure, correct? And it plays out that ways. So this is your TP. Even if you are scalping, you will have to get quick in and quick out. But your entry should be somewhere around here, not more than that. Otherwise, your risk to reward ratio will get equal. And you may not even get this trade. Probably the market can pull back. So that would lead you to the loss. So I would not want you to do that. Correct? So clear that point.
Yes, sir.
You follow the channels even on the 5-minute time scale. This trend lines will lead you everywhere. Everywhere. If you connect correct points, you will get your scalping trades. Okay. If you just connect it, it doesn't come. Okay, fine. Next time you get the spike, you connect that immediately. It follows that. Correct? The moment you get the reaction in the market, you have to connect the trend line. So let's say if we are here, what do you see? It can spike. It can spike. Why? It's on the confluence zone. You see this level is a level, key level as well. Getting it? You can enter with the risk of what? 2 candles or 3 candles until it gets broken out above the trend line. If it is breaking out the trend line, you exit. What would be your loss? Your loss would be very minor. It's like here, you are entering here, your stop loss is just above this candle, just above this high, this wick high. Okay. And your take profit should be here at this bottom. Because in 5 minutes, if it spikes, it would at least spike till here. Or make a tiny spike and continuous 2 or 3 spikes. It will reach here. So that's the risk to reward ratio. That's a better risk to reward ratio you can take in the 5-minute scalping trades. If you analyze the market, this shows me that the market is not even making any new highs, correct? And it is spiking down. Even eventually it doesn't make any new low, but the opportunity is lying down here. So why not to take a risk? What your risk is? Just 2 or 3 candles, right? And if you continue going down, if it just makes a bigger spike and breaks it out, you can hold even for the better picture of the downscale here. Then you can increase or trail your stop loss to down. But that's your picture. You see that? This is your channels. Even in the short time frame, you can scalp it like that. You just need to see the previous highs are getting broken or not. That's your safest zone. If it is not breaking, you don't need to worry. What you need is just a confluence point to enter. That's your best entry. That is your best entry. Because if you see, this is even a key level. I can see that. That's even a key level on the 5-minute chart. So you can wait for this area, and then when it does that, it would probably come back and test this area, and then it will go up. If it doesn't spike here, it will do like that, because here it's not a W. See, if the market is making a low, that's where you understand. Even if you see this is a W, right?
Yes.
This is a W, but this W has a low. W's work in a different way in the boom and crash. W has to be like that to be successful. W, double bottom.
Must not have a low.
It has to make a high like that. Then it's a W.
Okay.
Then it's a W, because the market structure says that it was a previous low and now the low is higher than the previous one. Then this W will success. It will have a success. Otherwise, it will fall back again. It is not a valid W. If this W has like this, it is like this, it may go up. It may go up. But this is not the W for the, or W or double bottom for the valid W or double bottom for the boom and crash, because the market structure is not validated. That's a new low. And if it is a new low, there is a probable chance that from the next level, it would come back. It would definitely come back. There are high probable chances. Okay.
Hello, Mithil.
So, yeah.
Yes, I'm here now. Okay.
Okay, great. What is your ID?
Good evening, sir.
Evening, brothers. Evening.
Okay. So I'm almost done with the trend line and scalping
Yes,
ideas
Yes.
and
yes.
channels as well. So you can continue with the introduction of the chart pattern, or
Okay. So make me
we
host.
can continue tomorrow.
So
because it's
just I
already
gave them an introduction,
Yes,
a little
yes,
bit introduction, but in the deep I will talk tomorrow.
yes, sure. So I'll make you the host.
Okay.
Mithil, thank you. It was very informative. I mean, this trend, I thought it is something else. I thought 4 hours, I had to jump 4 hours and then 1 hour and then maybe 15 minutes.
No, no, no,
But
no,
I
no.
think
See, this is the
Yeah.
reason why I always say that if you go step by step, you will really realize that it is working all the time. In boom
Exactly.
and crash, you don't have to worry about forex kind of movement, which is
Okay.
very uneven. This is very predictable. Yeah.
I know. Got it.
All right.
Thank you.
Yeah, yeah, yeah. Welcome.
Okay, so hello everyone. Do you see my screen?
Yes, sir.
Yes, sir.
Yes, sir.
Okay. So
Afternoon,
trend
sir.
lines, support and afternoon. Trend lines, support and resistance, everything is clear?
Yes, sir.
Getting clearer,
Okay.
sir.
Very
Yes,
much,
okay. Very much good. So you need a practice on the trend lines and support and resistance because the entry we can take only from the trend lines and support and resistance. Okay. So I'm just giving you an example. When we are driving the car on the road, and sometimes when signal appear red, we will stop, right? And
Yes.
then we are waiting to get ready. When you will get the signal of the yellow, then you will get ready. After that, when green signal appears, then you will start, right? In the
Correct, sir.
charts, in the market, same thing you will find. When the direction will change, you will find the chart pattern. And chart pattern, when it creates, it takes a time. When it takes a time, it means if you are on the 5-minute time frame or you are in the 15-minute time frame, whatever the time frame you are using, as compared the time frame you need to wait. If we are in the time frame for a 5 minute and the chart pattern is like which Mittal was talking, it's W. So this area, how much it will take time? Minimum 2 hours, right? Immediately trend will not change. It will take a time, 2 hours, sometimes 1 hour, sometimes 1.5 hours, sometimes 3 hours. So don't think when the price is going against you, the immediately trend will be changed. The new trend will prepare and make any chart pattern, and then it will start. So the chart patterns have a big role in the boom and crash. There are some common patterns, and everybody knows how to use in the boom. That is the main point. I'm going to ask from you people, do you know these chart patterns? And also you are using in the binary option Forex market. Which is this pattern?
M pattern.
M
M.
pattern. Okay, everyone knows it's a M pattern. Why this line is a big as compared to these two lines?
Sir, it's a trend of uptrend and
Very
then
nice.
making a lower high.
And what is this one? Also, it is the M, right?
Correct.
Yes.
But it is not showing you that the uptrend is not strong, right?
Yes.
But this is showing
Right.
you the uptrend is strong,
Strong.
right? So when market is moving in this direction, first it moved up, that was the uptrend, and then price gave you a M pattern. After retesting, price is moving down. Now price is following impulsive waves, right?
Sir.
And then again, if you got this M, then do you take this M?
No.
No, sir.
No, sir,
It's
no.
stage of change of trend.
This M, if you find in a downtrend,
No, will not take, sir. Only if it is in an uptrend, will take.
the chart pattern can be the sign of continuation. As sometimes when we are using the candles, the candle at the top, it is a reversal candle, right? It is the bottom, it is a reversal candle, right? But if it appear here, then what you will use? It's a continuation sign, right?
Sir.
So from chart pattern, this confirms you the trend is changed, right? And this what confirms you? The trend is continue again. When you are getting the one double bottom, again and again, if you get, you can use, but it must be valid. It must be valid, then you can use. But when we don't use, when market is in an uptrend, you got a this M, can you take? Which M is correct? This M is correct or this M is correct?
First one.
First one. Second one is not a correct M. It is possible when it broke this level and then price can move up. It shows that price creates a higher high, again higher high, right? And then it's moved down, broke. It can be false breakout. It can be false breakout, market can move up again. But here, which is the pattern in the price action in the market structure? Is it a pattern? Higher high and lower high, right?
Right.
After this one, it broke. Now, when the price is moving down, can we say it is a lower low? Before there was a higher low, and now it's a low or lower low, we can say, right? This M already gives you the sign of downtrend. We can use this M, not this M. Okay, so 2 points I'm going to show you here. This M, what showing here? And this M, what showing?
Downtrend.
Can anyone tell me? What is the difference? Only give me the answer on this one, on this line.
Downtrend and resistance.
One line is slopey, another is
Flat.
flat. So what is reflecting? This line is reflecting you that price will move,
Down.
and this line is reflecting you the price will.
Maybe ranging or maybe up.
It can be this one. Then it can move down. It is possible, right?
Yes, sir.
Yes.
So these are the functions. When there is a high, higher high, and there is a lower high. So higher high and lower high, it is a downtrend formation, right?
Yes.
High and similar high, it is a ranging formation. Sometimes it is possible it can move down, but mostly it will show you what? The range.
Range. Okay.
Okay, so we will use this one M and this one M, but we will expect more from the number 1 and we will not expect more from the number 2. We know that the trend will again not move in up direction, but it will be the range. A profit expectation, we can take big from here, a small from here, right? Okay. Now note down that we are using this M, right? And we are using this W. We are using this M, but our expectation will be not more, right?
Yes.
And you expect a flat market in future. Okay. How many high and low high is here? 1, right? If you find this picture, then what you call it? Or if you find this picture here, or sometimes you will find this picture here.
Inverse head and shoulder.
Inverse, not inverse. How you can define the triple top?
Yes.
Hmm? In the triple top, it is possible the first high, it can be the next high, can be the similar high, right? High. And the third top is a
Lower.
lower high. In a head and shoulder pattern, you will find what? A high, higher high, and lower high. You will find the key level. What you will find? A key level. How many key levels?
2.
2. This can be your head and shoulder. But this is what?
Triple top.
It is a chart pattern, triple top. Mostly you will find in the boom and crash, double top, triple top, head and shoulder, right?
Correct.
And for the downtrend, when the price change in an up direction, it can be the two similar high lows, and then in this triple bottom, there are two patterns. There are two patterns. One, it is a triple bottom, right?
Yes, sir.
And another is
W pattern.
another is
W.
W, right?
W.
Yes, sir.
But sometimes you will find the single double bottom, right?
Yes.
So these patterns always keep in mind. And this pattern in the invert, how we can define it? This one pattern, right? Here it will be the key level. This will be the key level. In the deep, we will talk tomorrow. I will show you on the chart how we can identify, how we can take, where we can enter, how much we can take the loss, and how much we can expect the profit. But these patterns we must use. And there are three types of patterns. How many patterns? 3. Reversal chart patterns. These patterns which I show you, which are these patterns? This one, this one, this one, this one. These all patterns, which are these type of patterns?
Reversal.
These are the reversal chart patterns. After this pattern, market is changing the trend. Here, 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 they are changing the trend. There are some continuation chart pattern. Which one? Continuation. And there are some bilateral chart patterns. All these are important to know. Before, who is using the chart patterns in Forex or binary trading? Anyone who is using?
Yes, sir. You tried the
Yes.
M and W pattern.
M and W pattern only you are using, right?
Yeah.
Okay. Sometimes, okay, so this is not, I'm going into deep. I just to show you one picture and then tell me your, as per your experience, what you are thinking, right? The price is moving up. It is showing the uptrend, right?
Yes, sir.
Then price move down, then price move up, move down, then move up, right? And then move down and then move up. Which is this pattern? Can anyone tell me?
Yes,
The
so
channel.
flat pattern. Flat
This is
pattern.
channel.
This is the pattern.
The channel pattern, correct?
No, it's not a channel pattern.
So it's a flag.
Flag will be this one.
Okay.
Okay.
So give us option A, B, C, D.
It is a one kind of wedge. It is a one kind of wedge. Mostly the traders will be trapped when there is an uptrend. This is what showing it is a uptrend, and price at the top of the uptrend is giving you the up range. This is the up range. Every time what you are getting after this higher high, you are getting the another higher high, right? Again you are getting the another higher high, right? But why this trend losing the momentum at this area? Before the trend was strong, why this trend is losing the momentum here? Understand? After this 3 touch at the top, the price will break and then it will move down. What you will find here? M.
Lower highs.
M pattern.
M pattern. Before, which is this pattern? A rising wedge. Which is this pattern?
Rising wedge.
Rising wedge.
Rising wedge. After the rising wedge, what you found? M pattern.
pattern.
M pattern.
So rising wedge is a reversal pattern. M pattern is a reversal pattern.
Continuation pattern.
Continuation.
Now it will be the continuation, right? After this downtrend, it is confirmed that the market is moving down. When you are getting this candle, it's a bearish engulfing, right?
Yes, sir.
Now, this is the continuation of this bearish engulfing, right?
Yeah.
It is the same like a candlestick, but candlestick have a different scenario. The chart patterns have a different scenario, right? So this is your rising wedge. This is your rising wedge. When sometimes when you find that price is moving up and then slowly it's making the high
Highs.
and lower high, but the distance of the new lower highs are very
Similar.
congested, right? After this one, when it breaks here, then market will move down. And here you will find another pattern. So this movement is a reversal movement. If you find the same pattern in a downtrend, then how you will identify? Right? And mostly you saw. Even you can check in the binary on the Forex, you will find a strong downtrend. This is a strong downtrend, right? This area is a strong downtrend. What happens here? The momentum is loose, right?
Yes, it's decreasing.
Momentum loose, and also it creates a pattern. This will be called the falling wedge. What it called?
Falling wedge.
Falling wedge.
Falling wedge. When it broke here, what it gives you?
W pattern.
W pattern. Now, what are the confirmation? Number 1, falling wedge. Number 2 confirmation is a W pattern. And now you will be 100% sure market will move up. You can take advantage. What will be the stop loss if this is not working? Right? And if it works, how much you will get? Possible this one. Here, if it not work, which will be your stop loss? This one. And if it work, when you will use the chart patterns, your profit ratio will be increased. Risk is everywhere. Don't think that if there is anything that we will never chase the risk. Everywhere is a risk, but small when we will use our education, information, right? So double top, triple top, head and shoulder, rising wedge. These are the reversal pattern for the downtrend. Double bottom, triple bottom, inverted head and shoulder, and falling wedge is the reversal pattern for the uptrend. These are the reversal patterns which we talk, and then also we will talk on the continuation pattern, bilateral pattern. Bilateral pattern is a two type of pattern. For example, it is a pattern. It can move up, it can move down. It is possible if the breakout is at the top upward side, it will move up. If the breakout you will find at the downward side, it can create a downtrend. But these patterns will not create an uptrend. Now this pattern will create only a downtrend. This pattern will create only uptrend. So bilateral patterns are also important to know that when you are in a trend, sometimes price is moving up, right? You found this one. Then price move down and then move up. Which is this pattern? Asymmetrical, right?
Symmetrical.
Yes, sir.
Symmetrical is the sign of continuation. It can be the sign of reversal, but it can be the sign of continuation. So some patterns are the continuation and reversal also. Sometimes you will find this pattern. Mostly you found, right?
Yes.
This is your ascending triangle, right?
Yes, sir.
This is a bilateral pattern. It can be the continuation, it can be the reversal. At the bottom side, sometimes you will find this one, right? It can be the price can move up here, right? It can move down, it can move up.
Yes.
It will be your continuation. This is the descending triangle. This is a symmetrical triangle. How many patterns are this one? 1, 2, 3. These are your bilateral patterns. These are your
Bilateral.
bilateral patterns. And there are two continuation patterns which I will teach you. That will be like this one. See here. Right? Okay. So price can come down, then move up. Price move up here. Mostly you saw it's moving down, right?
Yes, sir.
This is the one kind of falling and rising wedge. The reversal pattern of the rising wedge, which was this one? This one, right?
Yes.
The pointing of this area in which direction?
Upward.
Up.
The pointing of this direction is which?
Down.
Up or down?
Down.
Down. And we learned, I just gave the introduction of this one pattern. Right?
Yes.
Compare this pattern and compare this pattern. What is the difference? And compare this pattern and compare this pattern. What is the difference?
Sir, highs and lows, but down direction.
This direction is at the topward side, right?
Yes.
And this direction at the bottom side. A
Bottom
bottom
side.
side direction, it will move up, right?
Yes, sir.
And topward direction, it will move down. A topward direction, it will continue, right? And the bottom direction, it will
Move up.
continue at the topward. So this will be your continuation pattern. The chart patterns are very important to know, right? And I hope that tomorrow we will finish these chart patterns. I will show you on the chart, but I hope you all will find on the internet how these chart patterns are look like. And tomorrow, as you can all communicate with me, you can ask me the question. So when we find how we can find where we enter, where we do not enter, and how much target we can set on the chart pattern, and which time frame we can use for the chart pattern, or any time frame we can use, everything, any question you can ask tomorrow, but you prepare for the questions, right?
Yes, sir.
Any
Yes,
other
sir.
question? If you have, then I can answer.
Okay, sir. There is something that been bothering me. A kind
Yes,
of.
brother.
Yes, boom 1,000, boom 500, crash 1,000, crash 500. I wanted to
Yeah.
know, what's the difference? Boom 1,000 and boom 500. What's the difference, the similarities? I can't get.
Yes, very simple
place
difference
my
is there.
head on it. Okay, sir.
No, very simple difference is there, right?
Okay. I want
The
to know, sir.
1,000 pair
Yes.
and the 500 pair, whatever it is, the boom or it's a crash, right?
Yes.
The spikes of the 1,000 pair are bigger than the boom 500. The smaller spikes you will get here.
In terms of profit?
First, we are talking on the spikes, right? And then we are going to.
Yes. Okay. Okay.
So spikes, which will be bigger?
1,000.
1,000.
And smaller spikes you will get on the
500.
500.
500. The 1,000, as per the broker is that within the 1,000 tick, you will get a one spike. How many spike you will get?
1.
1,000.
One. And broker promises that within the 500 ticks, you will get the one spike, right?
Yes.
So this is the one security, right?
Okay.
Another, in the 1,000, you will get the big spikes. In the 500, you will get the small spikes. A big spike, big profit, right? Right?
Yes.
Yes.
And small spike,
Small.
Small profit.
small profit. But when on the 1,000, if 1 minute goes against you, and in the 500, when 1 minute goes against you, this will charge 0.17 cents on the lot of 0.2, right?
Okay.
And
For 1
this one
minute?
will charge, yes,
For 1 minute.
on the 1 minute, right? This is the one
Okay.
candle, 1 minute. If it go against you, right?
Yes.
Then on the 0.2 lot, it will charge 0.17, right?
From your account?
From your account. On the 500, if 1 minute go against you on the 0.2 lot, then it will charge
0.25.
0.25. So when you will observe, if the 10 candles move against in the 1,000 pair, right? 10 candles goes against, and the 10 candles goes against in the 500, you will find the difference on this minus this charge, and you will find the difference on this charge. So there are some cent different. There are some cent also different. You can hold too much here. You cannot hold too much here, right?
Yes, sir. Okay.
So that is a difference. That is a difference. Lot of spikes you will find in the 500 pair. Very few spikes as compared to the 500 you will find on the 1,000. But it is not necessary. If the trend is down, on the crash 1,000, you will get so many spikes, right?
Yes.
But in the trend is up, in the crash 1,000, you will get
Very less.
a spike on this, what the broker promising, right? If the trend is strongly up, then every 1,000 tick you will get the one spike. It can be small, it can be big. But if the trend is downtrend, it is a momentum, right? Then again and again you will find the spike. It is not necessary that only when the 1,000 tick will complete, then you will get the spike. But within the 1,000 tick, you will get the sure one spike. That is a difference. It is clear?
Okay. Yes, sir.
Okay. So another example I'm going to show you. Euro USD, right? When you are purchasing the one lot of Euro USD and when you are purchasing the one lot of right? If the price move up 10 pip, if the price move up 10 pip, here you will get the $100 profit possible. Here you will get the $20 profit. The movement is the same. Why? The leverage are the amount of the movement, the value of the movement is bigger in the gold and value of the movement is very smaller on the Euro USD, right? So it is the same thing. You can say it is a 500, it is a 1,000, right? This value is set by the broker. Okay.
Okay.
Okay. Now, any other question? If there is no question, then we will be tomorrow, inshallah, on the chart patterns, right?
Right, sir, but
Right,
we
sir.
missed you, sir.
You missed me.
Yes, sir.
I was a meeting. I was a meeting with Coder.
He was with us.
That's why I told the Mithal that you take the class because the 7 p.m. I was a meeting. And that was very important meeting because I was starting the copy trading. So that meeting was very important. That's why I was not available in the start. But
When you're launching, sir, copy trading?
copy trading is started.
You started? Okay.
Yes, yes, it started.
We didn't got any info about it.
But it has not been announced.
Yes, in the start, I just took 5 accounts from the academy members, right? So
Okay.
after 1 week, when I will see the results, if everything is going good, everything is perfect, then I will announce the copy
Announce
trading.
it.
Yes, then I
Copy
will
trading
announce.
in this same boom and crash?
In the boom and crash, yes.
Okay, okay,
In the boom and crash.
okay.
Okay.
Okay, sir. We would like to see the modalities when everything works well. As
Yes,
well.
yes, yes. inshallah. Okay. Thank you so much, brothers. Thank you.
Thank
All
you,
right,
sir.
Thank you very
everyone.
much, sir. All
Thank
right,
you,
Mital.
Mital.
Thank you.
Thank you.
Today you have perfect session. We was very much interesting.
Yes, very well.
Thank you.
Thank
Thank
you.
you.
Thank you.
Key point
All
boom,
right.
key point crash.
Okay. Thank you so much, everyone.
All right.
Thank you, sir.
All right. Bye-bye.
All right. Bye.
All right.